Hey guys, my name's Greg, and I've been trading since 2020. And to be honest, the early days were rough. I was constantly losing trades, I was chasing price, and worst of all, I was always changing my strategy. But everything changed when I found an edge that actually made sense, and I actually started following it long enough to see the edge work. I started passing prop firm challenges, getting payouts, and then I started teaching others. In this video, I'm going to show you one of these strategies. It's simple, it shows up multiple times a month, and if you actually follow it long enough, it's going to make you money. But don't take my word for it. Backtest it, see how it performs, and decide for yourself. So, without further ado, let's dive in. Okay, so this strategy employs the daily range. And the daily range is set in Asia during 7:30 and 8:25. In London, it's set between 3 o'clock and 3:55. And in New York, it's set between 9:30 and 10:25. So the daily range is the highest and lowest wick between these two times. So if you're looking at Asia, right, you have 7:30, 8:25. You have the highest wick, which is here, and the lowest wick, which is here. Then you have the implied daily range, which is the highest body close and the lowest body close between these two times. So you have the daily range and implied daily range. Then we want to look for a model that is broken. And a model is broken when the IDR midpoint is broken after the session. So a lot of people will just trade a sweep of liquidity either way every single time. But you need to look for the model broken, because if the model isn't broken, then it could just be continuation, and you're just gonna get wrecked on trying to short a trending market. So for example, this is the implied daily range, and the midpoint would be here, right here. So that's our implied daily range. If this breaks after the session ends, not yet, not yet, not yet. Okay, all right, it's been broken. So if that's the case, we expect this and this. So once this high gets taken, we're going to short in the opposite direction if there is a 2-minute smart money character break, okay? If you don't have the smart money indicator, go into your indicators and write SMC, and there you go, smart money concepts, right there. It's free as well. Okay, so this character break, obviously, now we've got the sweep. Okay, so now we go forward, 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 forward. It's quite taken, that's fine. Where was this break? Where's this break? There it is, there's our break. It's above. And we want to target the lows. And we're probably going to go break even just as it passes back below that midpoint. So let's see what we got. Ooh, okay. So this is great. So I want you to know that the strategy is not going to work every single time. That's just not how it is. And I'm always very transparent in this channel. I don't want just to show you all the winners. But that doesn't mean that this setup isn't going to present again. So we have lost this trade. Okay. But now, let's see if it presents in London, right? We want to see if it presents in London. Oh, just missed that timing of that short, but that's trading, folks. Okay, so now we have an implied daily range with IDR. There's our midpoint. That's fine. Where's the end of the session? Still got some time. Okay. Okay. End of the session. Broken model. London highs. Actually, what's great about this is that, actually I want to get rid of this here. Get rid of that now. What's great about this is now that we have Asian lows with a broken model not taken, and we have London lows in a broken model not taken. So for this, we can actually target the Asian lows, so we can actually get more out of this trade. Let's have a look. Waiting for that to take. There it goes. Okay. All right. So now we go back to the 2 minute. We'll wait for that character shift. There it goes. So you could have got in here on that candle. It's a pretty big stop. Let's have a check. 50 ticks, not great. So if the stop is wide, what you can do is you can go to the 5 minute. Actually, I even do it in the 2 minute. And you can just kind of look, okay, where is there a lot of imbalance? And you can probably just take it from the top of the candle where it starts to displace. You can also do that as well. How much is that? 38. Okay. All right. So I hope this plays out for the video. So, okay. So, yeah, we're going to target the London low and the Asian low. Both models are broken, so I'm expecting both lows to be taken. Let's have a look. Oh, okay, sweet. Right, there you go. That's the trade. And look what happens. The moment the Asian low gets swept, there's a response. So let's see where we end up today. Oh, damn. Yeah, I mean, you know, you could keep trying that. So what do we see here? We see the Asian model broken. We got into a trade. It didn't work for us. That's perfectly fine. Then we set up for the next trade, and bang, perfect. Asian lows taken, London lows taken. So again, what are we looking for in this strategy? Well, I'll write this out again for you guys. So, if we have a broken model, we wait for a high or low, and my typing's terrible, to be taken. We wait for a 2 minute SMC shift. Oh, it's a character break. Character break. And we target the opposite low or high. That's it. And again, are you going to be a millionaire off this one strategy alone? No. But I guarantee if you do this every month, you're going to make money. You know, you are going to make money with this strategy. I'll probably say it's a 35%, 40% strategy. Again, just don't jump into the markets and start trading it. Go back to your charts, back test it, log the data, and see for yourself. And what I really like about this strategy is that a lot of people will talk about intra-session liquidity. And so they're just longing or shorting any liquidity sweep every time it happens. But what this does is it works as a confluence, which increases your probabilities as to when the sweep will actually happen and will reverse. And if you don't have that broken model, the price tends to just keep trending upwards. And when you have a broken model, it's showing you that the highs or the lows from the previous session are probably both going to get taken because liquidity isn't trending. And so for the market to move, it has to take both sides. And that's what you're betting on. So again, guys, go in there, back test this. If you have any questions about this strategy, just write in the comments and I'll reply to you and we'll get you trading. Okay, guys, thanks for watching and I'll see you on the next one.